You get to do a whole bunch of back and forth. You ready? All right.
Barry, can you hear Darren?
All right.
Okay.
We're good. Ready.
Okay. In 3, 2, and 1.
Hey, folks, welcome back to your Frederick Real Estate Update. I am Darren Ahern with RE/MAX Results, bringing you almost 23 years experience in the Maryland and PA region. Hope you're having a great weekend. Hot out there, but it's finally gotten a little bit cooler. And the man, the myth, the legend, the one and only from Presidential Bank Mortgage, Terry Kernan, he is celebrating his big birthday weekend at a place that he loves so much. And we're going to see if he is with us there. Terry, are you there? All righty. Good to hear from you there. Let's get right on into it. We're going to, unless you want to share with everybody where you're at and what you're doing for your big weekend.
Terry and Joey and Bridget will be here, and with their spouses and significant others. It's going to be a great weekend. Looking forward to spending time with families. You know, when you get to this point, when your kids are in their 30s, it's kind of hard to get them all together. So this is a special time for me. So I'm pretty pumped.
All right. Well, thank you so much. All of the listeners say thank you also for taking some time out on your vacation to be able to cover some things here with me about what's happening in the mortgage and real estate market. I'm going to hit the numbers real quick. 609 homes are for sale in Frederick County. Last week it was 605. So we only have a net gain of 4 homes, which it's been a while since we've seen that happen. We'll keep an eye on it. Coming soon, 79 homes resale, 466. With a median days, 53 days, 53 average days on market, and a 582 price. Resale, single-family homes, 272 of those at 59 days and a 684 price. Things are right on the edge. Nothing's really changed value-wise, or they're down a little bit, actually, in some of these categories. The resale for townhouse and condos, 193 of those at 45 days, 437 price. New construction, 149 of those. 90 single-family homes at 815, so holding very steady. But I have heard of some builders that have been reducing their base prices in the last week. So that speaks of volumes as far as the new construction stuff. 47 townhouse condos, brand new out there. 513,000 is the average, holding pretty steady. Under contracts, 442. Resales, 348 of those at 36 days and a 571 price. 94 brand new homes under contract. 48 single-family homes at a 951 average. And like I told everybody before, if you've been listening in, that's a bunch of those $1 million and up properties pulling those up. Townhouse 500 holding very steady there. That hasn't moved in a long time, the under contracts on those. So we can definitely see how it's been flat. Sold in the last 30 days, 261, 249 resale, 24 average days at 537 price. Single family homes, 156 with 24 days on a 612 price. Townhouse and condos, 93 of those at 24 days and 410. 12 brand new sales in the last 30 days, 6 single family homes, 6 townhouses. And the big one, Terry, that you like, the sold to list price ratio, 98.6. It went down a little bit. So there's the numbers. Any comments on things that you're seeing out there?
Basically, very slow week. Very slow week. What's going on in the market is people are still, that rate anxiety is out there. The Fed did meet, and they held the rate steady. But what was taken from the meeting, Darren, and this is what's kind of interesting, is we're looking at, the Feds came out and basically held rates steady. But for the first time in 32 years, there were 2 of the federal governors that dissented at a meeting. And even though the Fed paused, there's a growing cohort of members that is more interested in getting the cuts started. And somebody said to me, well, why do you think, Powell is being not wanting to cut or whatever. And the one thing that I talked about was, when Trump basically said you got to cut rates, it wasn't his idea. So it's kind of hard to tell Chairman Powell that, hey, you got to cut rates. And I think he'll do it when he believes that it's his idea. It's easier to tell somebody or easier for somebody to do something you want if it's their idea. So we're starting to see a little dissension in the Federal Reserve. So I think when they meet again in September, we will definitely see a rate cut.
Yeah, and this week, so yeah, definitely. Yeah, we're definitely seeing that. It's definitely the big vacation weeks and getting ready for school coming up. All this time of the year is kind of seasonal. But yeah, my opinion, I think they should have stayed ahead of the curve just based on all that we've seen with the slowing of the economy, consumer consumption, confidence. They talked about spending power and the debt load and affordability. This is definitely at this point not an interest rate problem overall. It's debt crisis, as we know, with credit card debts all-time high, 1.4 trillion, along with student debts and all of that. So the big thing is we're real close to, I know rates went up a little bit, 7% almost. We're right on the edge and we've been there forever. But my question becomes this, Terry. So what would have happened, and people are going to ask this, I know I've had people want to know this, what would happen if they did lower the rates just a quarter basis point or 0.5% or so? What do you think would have happened overall with where things are at as in the whole entire economic status of everything?
So if they lower it a quarter, it really doesn't mean a whole lot of difference, right? It's not a big difference. But what it is it's going in the right direction. So I think it would have made people, but the markets weren't ready. They had not factored in a cut. So I think that what would happen is if it was a cut, people would have, the stock market would have raised a bunch and the bond market would have, that the interest rates would have gone up temporarily. So our mortgage rates would have gone up temporarily if they did come out and cut yesterday, because it would have been good news for the market. And I think we would have seen another rally in the stock market. But I think that would have been temporary because what we're looking at is what we need is momentum. So if they do one cut now, they're not going to come back in September and raise it again. They're going to cut the rate knowing that they don't have to come back and raise it. And I think that's what Powell's waiting for. But there's starting to be, a little bit of grumblings within his group that says, hey, we need to get ahead of the ball game, start cutting rates now. But it wouldn't be a whole lot that's going to change. You're not going to see a whole lot. I think it just is really confidence in what the economy's doing, and it's all on how you present it to the public.
Yeah, definitely. That's it. The big thing is removing a little bit of maybe of uncertainty would have been it, and lowering borrower rates for consumers on personal loans, credit cards, car loans, adjustable rates, commercial loans, and all that. Everything but residential loans, like you had talked about. And that's something that's key for people to think about and understand how that affects everything. But you're right. It wasn't going to change a lot as far as that. But I did read that a large number of buyers, to get back into the market, what's it going to take? And the impact of that rate related, as we know, is 6%. And they said, or prices to come down 10%. And they had said, if that happens, and we get down to 6 or lower, 1.2 million buyers would be able to now afford home ownership. So how in the world do you define, first of all, Terry, I always wonder, where do they get these numbers from in some regards? Like, how do they do these polls? And I think it's just a matter of maybe confidence, like saying, okay, at what rate would you jump back in the market and you would be able to more so afford than you could right now? And it seems like almost a whole percent is what the public is really asking for, waiting for, and wanting. And I don't know if Powell and the Fed Reserves and the committee that meets together that obviously makes the final decisions on things, I don't know if they see that. They have to see this stuff and think about these things and take their own numbers and things. Or do they just look at gross national products and CPIs and this index and that index and the stock market and all these things, rather than listening to the voice of the consumer and where the economy is as far as for that? What are your thoughts on that?
think that most of their decisions are based off of actual data. Okay. Like you said, they don't go out and interview people and say, "Hey, what do you think?" They look at data, and a lot of times when you see, Chairman Powell will say, "Hey, we're going to cut it this time, or we're going to hold steady this time," but everything in the future is going to depend on data, and that is very, very, he does hold to that. He looks at the data. The PCE came out, and that came out on Thursday, and that showed that we were basically that inflation was moving a little higher, a little hotter than they want, but it's what they expected. So we didn't see a huge crash in the market or lowering interest rates or higher or anything. It kind of, that's what they were looking for, is the PCE. It showed that inflation rose 2.6 year over year, and it was, 0.1% hotter. It came in at 0.3%, so it came in at 0.1% higher. So that number alone, which is the Fed's favorite target of inflation, that number alone is not going to help push Chairman Powell into cutting rates, because it still shows that inflation actually has gone up, and it could be the tariffs. Nobody really knows, but that's kind of what they're taking a look at. So yeah, the answer to your question is, I believe that they look solely at the data that comes in, and they don't, they try to shut everything else out and make the decision on their own.
And obviously, as you know, and we've talked about this, rear view data thinking, we call it a little bit, once something happens and then you react. And if we did that, like right now in the current real estate market, yeah, it's great to have sold and other data and things like that. But the trend in our world, as we know, to stay ahead of it is really a key important thing to do. And that's why I always wonder if they really think ahead of like the waves of what's coming or what's happening in real time as far as trending. But I know these guys are smart. They must know something maybe we don't at times. I think about that too. I'm just glad I'm not part of it all. But we are part of helping buyers and sellers and getting loans for people. So Terry, what are you seeing as far as what are the biggest questions that buyers right now are asking or concerned about, or thoughts of when it comes to getting pre-qualified and getting a loan right now?
Big question is, do I qualify for a grant? What's out there? What's available to me? There's a lot of people out there, that still think that they need 20% down to get into a house. There's a lot of people out there that think that they had a bankruptcy, 4 years ago, and they can't buy a house. Don't always believe what you think. And I've said that a million times on the show, is don't always believe what you think. You can buy a house. There is money out there. So a lot of people are still, the chatter is the rates. And, down at the beach, starting to see houses sit for longer and longer down at the beach. The second home market is starting to be very rate conscious. I think that we saw down at the beach, we saw a tremendous amount of people in COVID that were renters actually became landlords. So you took a lot of people off the rental market and they became landlords. So the demand for rentals actually, I believe, has been down over the last 3 years down here at the beach. So you're starting to see the second home market take a little bit of a hit down here because, there's not as many people looking to get into the business to be a landlord. So it's kind of different down here, but I'm feeling that it's going to start inching towards the rest of Maryland, the rest of Virginia, the rest of, the area with the rates and so forth. And a lot of it is, or with the inventory. So I think we're seeing a little bit of, prices being dropped down here, and I think we might start to see that. And it's all rate related, I believe. Well, what you said, if we get under 6%, it's going to open the floodgates, I think.
Yeah, that's what I keep saying. 5.99, boys and girls. So, a couple other fun facts, Terry, is number one, the Fed, it doesn't meet in August. I think it's September 17th. I had heard that will be the next possible time of change to have a rate cut and see if that will happen. And we're going to hold to it that, man, 25% or whatever. Another big thing, Terry, a fun fact that people don't realize is how significant housing is, and not only just buying and selling, but also the construction, everyday purchases, updates, remodels, flipping houses, all the kind of stuff that comes out of Lowe's, Home Depot, hardware stores, and manufacturing, 84 Lumbers, if you will, and everybody else out there that is part of producing anything that goes into the housing and construction and building industry of any sorts. 35% of our GDP, gross domestic product, is tied up within our housing. And so this is really, really important factor to our entire economy, especially when we start to see that the sales volume and numbers are been teetering in some of the lowest we've seen in decades as far as the volume amount and such like that. So those are fun facts. And Maryland stuff, Terry, I'll share real quick. In Maryland, I haven't done this in a while. Now that we're halfway through the year or more, units sold year to date, volume, the amount of homes compared to last year in the state of Maryland is down 1.3%. In Frederick County, we're following a lot of these same numbers I saw. Average price is up 3.9, median price 3.3%. So we've got those high, lows, and dips, but it becomes very granular. But the median average price of a home, $435 was last year. Now we're at $450 for the state of Maryland, and the median and the average price at $543. So we're a little bit above the national average as far as housing and costs and such like that. And some would argue and say, yeah, but our incomes and wages and things like that in the state of Maryland, we're in the top 10 of the United States practically as a whole. And so therefore it should offset all that. And I say, I don't know. The cost of living and all that is still going up as far as everything. And that does affect affordability. 2.5 months supply. That's about where we are, pretty close. We're like 2.7 or so in Frederick and all that. And then so that's the fun fact numbers, state of Maryland stuff a little bit compared to Frederick County and everything like that as well. So, all right, Terry, let's switch gears into this big thing that is always been big, but this is something I've encountered. Two big things this week. Number one, a buyer that was wanting to buy a house that's up for auction. So we haven't heard too many foreclosures, short sales, auctions, flips, and all these. Where's that needle in the haystack house I can get for $200,000 that's worth $400,000? Darren, just please send it to me. Put it under the Christmas tree. Put it in a bow, and we're happy as can be, and we love you. Yeah, so I came across this auction. And real quick, Terry, the way they work, I just want to inform and let everybody know a little educational thing here. I think a lot of people, number one, think when they think of an auction, they think the first thing is, this is going to be an amazing deal. I mean, I'm getting a deal of a lifetime. Not so much typically. I mean, you might get a little bit of a deal, but probably not so much, especially in the market we're coming out of. It's not like we've been in a buyer's market for 6 months and it's a different story. The biggest thing with auctions, the other thing I found, Terry, that people think about, buyers do, is that it's going to sell no matter what, and not always. So you got two kinds. You have absolute auctions where there's no reserve. It's going to sell no matter what. Those are rare, but I've seen them. But more so, you get those that are online that are reserved. The buyer has to bid a certain amount before the asset manager, as we would call the non-performing asset manager company, whoever's the investor, is going to let it sell at a specific price and no less whatsoever. They've already set that on a number of factors, not just this is what we want. A lot of it's more so what we need, what's owed, and other costs and fees and associated with selling a property. And there's a lot of them. So the big thing too is in person or online. And a lot of auctions, 90% of them are online. It's a bidding war. You go on, you register, and you bid online. I help you with that as an agent. And then the other one is in person. This one is an in-person one in August. So it's like August 23rd, 10 o'clock in the morning, front steps of the house. And you can do your due diligence. You can do an inspection, the whole 9 yards. But there's two big things. So that's how those work. And the ones that are in person are normally ones without reserve typically. Also, I've seen that as well. No reserve. It's an absolute auction. It's going to be, on the steps. And here we go. Couple big thoughts, Terry, I think about when I help somebody with these is, number one, they don't realize they have to have a deposit up front. You can't bid until you have money on the table. And when I say money on the table, we're talking like 10 grand. A lot of them, minimum $10,000 deposit. And buyers are like, whoa, why so much money? Because you're playing with the sandbox that's different than a lot. And you're in that box, you're in the auction box and trying to get a good deal on a house. So usually there's an upfront deposit. Yes, if you don't win the bid, you get the money back, but they want to be able to see that you can perform. The other big thing that a lot of buyers don't have any idea is that these auction companies and the person selling them and all these, they don't pay the compensation fees and the split and the recordation taxes and the whole 9 yards. Somewhat almost like a brand new build. They act like they have sometimes a 6 to 10%. This one I saw, 10% buyer premium. So in a $200,000 opening bid house, you as a buyer not only have to put down 10 grand, you have to have $20,000 just as a buyer premium to pay as far as a part of the sale if you win. And that's not negotiable, non-refundable. It goes towards your purchase, but it's part of the whole gig. And so by the time I educate buyers and go through all the intricacies and the ins and outs and details of an auction, buying a house at an auction type thing, 9 out of 10 of them, if you're not an investor and you've done this, you're like, no, this ain't going to work for me. I'm not ready. I don't want to do this. It's too risky. It's this, it's that, whatever. Most investors that have done this, they know what's going on with it. And one of the big things I look at too, Terry, is before you even go to the steps or you bid online, we want to have a title company like Community Title Network, who is awesome, Brianne over there, to pull up the title search a little bit and see if there's any liens, taxes aren't paid, anything against the property, because guess what happens as a buyer? You get to inherit all that stuff as well. So you could go instantly from thinking you're getting an amazing deal to, this isn't a good deal whatsoever. And that's not even taken into the account of the condition of the property. So any thoughts you have on auction stuff that you've seen? Have you ever done any loans for someone that has bought a house at an auction?
What's called delayed financing. I've talked a little bit about this on prior shows in the past, but delayed financing is where somebody will leverage their stuff. They will leverage the equity of their current home. And they will take that money and they'll go out and they'll buy a home at auction. And they will go in and they'll, do whatever they need to do. And then we'll come in and we will basically give them a loan. And if you do it within 6 months of when you won or when you took possession of the property, then we can treat it as a purchase. So you would still basically be able to write off the interest for your taxes, and we basically come in and do delayed financing. That's the best way to do it. Now, I have had people that have come to me and said, hey, I just won this house at auction. I need a loan. And you look at it and you're like, well, you need an FHA loan, which means they have to have an appraisal done. And you're buying this house as is, and it's not going to fly. And you've got some, so a lot of people really don't know what they're doing. And you really got to understand the ball game that you need the money up front. You need the cash up front. Can we get you the cash back? Yes, we can. We can get you the cash back, but in 6 months, if you come and apply, a week after you settle, then we can get you your cash back usually within 30 days. And that basically, you can replenish the line of credit on your house. You can replenish the line of credit on your stock. But the thing that I highly recommend about an auction is if you talk to people that are professionals at this, that flip houses for a profession, they said that you will see times when the auction's on the front door or on the courthouse stairs or online, and you'll see somebody just bidding up to where they are going to get it no matter what, because they're a rookie and they want to flip a house or they want to get this house or whatever, and they'll overpay and they'll run the cost up. The other person at these auctions, the live auctions, online it's a little bit, I don't know how it works as much online, but there's always somebody from the bank there that could be bidding it up as well. So, make sure you do your research.
Yep.
If you're going for a specific house, make sure are there other liens, like you said? So important. You've got to get title insurance. Title insurance is optional for a buyer.
Yeah. Right.
When
Right.
you're buying a foreclosure, you'd be crazy not to get title insurance. Total crazy. So you just got to be very careful, very cautious. But the key is, do your research. Talk to somebody that knows what they're doing. Talk to Darren. And have you helped a lot of people with auctions, Darren?
No, in my 22 years, I think I've only done maybe 3 of them. And thank God all 3 turned out good. They were all flip properties, I believe, and investors and such like that. And of course, I never done one alone. They all had cash. So it kind of made that part of the job easier. But at the end of the day, they still relied heavily on me as a professional to guide them through to make sure there was no hiccups. And that's the big misnomer. I've heard people say, oh, if I'm buying a foreclosure auction, I don't need an agent. I know how to do this. I'll go watch a YouTube video. You're gonna have problems. You're gonna flip out and have horror stories probably 9 out of 10 times. And so, yeah. Alrighty, so we got about 2 minutes left in the program. Let's talk about a big issue that's still there, and this is a big one in our market. With the shift of the market, as home condition has now become more of a major part of getting sold or not. Not only is price the most important thing, the number 2 thing is condition, and sellers are still out there thinking COVID prices, and I don't need to do much to repair or update my home. I'll still get top dollar because my neighbor did before. Those days are gone, guys. The bottom line is this. Anytime there's a natural market shift or change, there's always those that have to feel the pain of not dealing with the condition. And the sellers that listen to us as agents and help to professionally guide you through are going to be able to, and take it to heart, are going to be the ones that are going to net the most money and all that. Terry, one of my favorite things I hear all the time is, oh, I don't want to replace and do the paint. I don't want to do the carpet or flooring. What if somebody doesn't like it? It's almost verbatim. That is the worst thinking a seller could think. What if somebody doesn't like it? No, they're going to love it because we're going to do it in a way that makes your house stand out and shows amazing, and that you're going to get top dollar and quicker and better offers and for more money and put more money in your pocket. The only time they're not going to like it is if you do polka dots and you do something crazy and wild. So yeah. And this is the thing, Terry, I'm very sensitive to the fact that some sellers, even though we tell them what to do to make most sellable, I'm very sensitive to the fact that they may not have any money to address any deferred maintenance or repairs or anything. And it's not a problem. It's not to be embarrassed about. The only solution at that point is just price it into the market where it's supposed to be, or within the present condition, and then you're fine. But there's still a number of sellers that they have the money, they can make the repairs or updates. They just don't want to do it because they think they know more than us as agents that do this every day and know what's selling for what. And condition is a big factor. If people are paying top dollar, they want it perfect. Remember, we live in an entitlement society. So, all right, guys, that is our show for this week. Thank you guys so much for tuning to your Frederick Real Estate Update. Go down in the drop-down menu on WFMD of all the past programs, and make sure at the end here, jot down Terry and my information. We look forward to hearing you and serving you, and have a great, now it is August. Take care. Happy buying and selling. Thanks. All right. Thanks for tuning in to your weekly dose of all things in real estate and mortgages. We will see you next time.